Folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and the rundown for today's agenda will be the economic data that is set to be released today, and there is a lot of it. Secondly, we're going to discuss the yield curve and how historically the yield curve has predicted recession and how the stock market has a lagging reaction traditionally to the yield curve inverting, and why now may not be the absolute break for this market. Now, it's certainly arguable given the price action of the past week, the volatility, the lower highs, lower lows, etc. We'll talk about that. And then we're going to segue into our watch stocks, which will include members' stock chart request. And then we'll leave off with the pre-market activity, which will begin at around the 5 a.m. mark Eastern Standard Time. But before we get to it, let's talk about our sponsor, which is TrendSpider. TrendSpider is the next level in automated technical analysis. If you're a working investor or if you're a trader that needs rapid automated technical analysis, TrendSpider is for you. Overlays of support and resistance levels at the click of a button. You want manual drawings? The system remembers these manually drawn support and resistance levels. If you want heat maps, there you have it. The darker the color, the more support and or resistance you have. If you want trend lines on a daily basis, on a daily chart, you got it. If you want to see on a daily chart where weekly resistances or monthly resistances, press a button and it's all there. And we're going to come back to this chart in a quick moment. I have been invited back to a webinar this coming Sunday, the 18th, with TrendSpider. We'll be talking about our recent USLV trade and whatever else they want me to talk about using their software. If you're interested, if you watch this on YouTube, click the link below. Or if you watch this on the website, click the link above to register free of charge. And if you want to test out TrendSpider, there's also another link. Use that link along with discount code CT25Z, CT25Z, to get 25% off. And TrendSpider is included with our silver and gold level memberships. Let's get to today's agenda. I will begin with economic data that is set to be released today. First off, we have weekly jobless claims. That's a weekly number. Not much to talk about here. I don't expect that unless it changes dramatically to move the market. Now, this will. Retail sales. Remember, 70% of the U.S. economy is consumer driven. If the consumer begins to pull back on their lattes and frappuccinos, this economy is in big, big trouble. Fast forward to productivity. A big number, important, unit labor costs. Do we have wage inflation? Then the Empire State Manufacturing Index, then the Philly Fed. All of this at 8:30 a.m. Eastern Standard Time. At 9:15, just before the open, we have industrial production and manufacturing output along with capacity utilization. And at 10 a.m. after the market opens, business inventories. In short, folks, expect volatility this morning. I would not go chasing this market at current as I'm recording this. The futures are up. I would not go chasing this market in either direction. Let the markets settle down. Overnight, yield curve, which I'm going to talk about very soon. Overnight headline, 30-year yield tumbles to 2% for the first time ever. I am concerned about this being a blow off top in bonds. And were there a time for the Chinese to begin selling their treasuries? Now is it. And that's what concerns me about this headline. Because President Trump did blink the other day. I'm a big fan of his. But I'll tell you, I call a spade a spade. He blinked. And were I the Chinese, I would counterpunch right now. Because they do not want him in office after the 2020 elections. And to achieve that means to the end, I would begin dumping treasuries at very, very good prices and sending this bond market into turmoil along with the stock market. Now, segueing over into the yield curve, this is a chart of the yield curve going back 30 years. And what I have overlaid here are the S&P 500 in blue. In gold, we have gold. And, of course, the yield curve in candlestick. And I've been speaking about this decline in the yield curve, the narrowing of the gap between the 2s versus 10s for quite some time now. And I warned, a break below this lower band of support, this bear flag formation would send us probably down to an inverted yield curve. And here we sit today. We have the first negative read on the yield curve since 2007. Now, these gray areas here mark prior times where we have had a negative yield curve and where we have been in recession. And when you look back at the performance, again, the S&P 500 is in blue. When you look at the performance of the S&P 500 during the yield curve inverting, it doesn't immediately crash. It's when yields begin to move higher, that's when the market begins to crash. Just as you saw back here in 1990, it's when the spreads begin to widen out again. That's when the stock market begins to go into a correction. That's because it's confirmed that the United States is in recession and that the Federal Reserve is attempting to manipulate rates to try to get us out of recession. And as you can see back here in 1990, we were well into a recovery in the yield curve prior to the stock market rolling over. Fast forward to 2000. This is the dot-com crash. It wasn't until August of 2000 that the S&P 500 ultimately began to peter out and roll over. And by that time, the 30-year bond was rallying higher. Fast forward to the financial crisis. We had a double bottom setup and an inverted yield curve, not once, but twice. What was the stock market doing? It was in an uptrend. So by virtue of the fact that we have a negative yield curve at current doesn't necessarily mean that the stock market is going to crash. Does it imply that there's a strong probability that we are in recession? Absolutely. History has taught us that. But don't expect automatically that the stock market is going to go into free fall. That is a misnomer. We are disproving it here this morning. If you want to leave a comment, please do so, and I will definitely get back to you. Let's segue now over and into our watch stocks and member stock chart request using TrendSpider's automated technical analysis. So this is the spiders first up. Spiders, obviously yesterday, a horrible day, a bearish key reversal. We have support below, last seen back on August the 7th. But where did we close out yesterday? Let's pull up our daily trend lines first. On a daily basis, we closed just shy of support. Now, when we take the daily trend lines off, this is still a daily chart. I'm going to overlay weekly support. Guess where we closed yesterday? Again, just shy of very, very strong support on a weekly basis. Does that mean that we can't overshoot to the downside? Of course we can. We did it back here on August the 7th. We did it again back here on August the 5th. What would concern me is if we close down below this lower band of weekly support tomorrow, because all of a sudden this support would now have become resistance. So would I be a buyer here? No, I would not be a buyer. I'd be watching, but I would not be a buyer. Why? Our RSI, double top, lower highs, and breaking down to new lower lows, Stokes rolling over. So the market has not given us the signal yet that it's all safe to go back in the water. Right now, it's simply a watch. And if anything right now, what I would be looking for is a rally up to recent support, because I would be looking to short the market into that resistance level. I don't want to go chasing the market short into a support level. I want to wait for the rally, a counter trend rally. And I would be looking for resistance again at this upper band of resistance. So we are now in a fairly confirmed downtrend in this market. So don't go catching a falling knife, and don't let the pre-market futures lure you into a false sense of security. Next chart up, Groupon. Now, I like Groupon because it's at extreme oversold levels, but it is going lower. I would not be a buyer here. If you're using TrendSpider, all you need to do, if you want to find out where there's historical support below, let's go to a monthly support level. And you can see that we are nearing support. I drew this previously at the 2.39 level. So what I want to do is I want to create an alert at this support level. And I want to be notified quickly of that event. And we'll keep this active for a few days. And our alert is set. We're good to go. Set it and forget it. And the value of setting these alerts, folks, it allows you to go about your day without being a slave to the computer. And it also provides you discipline. What do I mean by that? Well, you could go back to the daily chart and look at it and say, okay, I know where there's historical support because Bob told me to do my due diligence and I know where it is. But man, with RSI at 15.79, that's very attractive. These stocks are very oversold. You can talk yourself into a trade. When you enter an alert and you walk away, stop looking at the chart. It provides you a discipline. Don't go back to it until that alert is triggered. You'll be notified by email and or text. Moving on. Floor Corp. We have RSI here at 13.72. Stokes are flatlined, very attractive. But the question is, where do we have historical support below? We're nearing it. Right here. Let's see if it's validated on a monthly view. We'll overlay on a weekly chart, a monthly view. Get rid of the weekly support levels, bring up, yeah, it's very interesting. Okay, so in dashed line, we're using a weekly chart, but I have monthly overlays. We are at historical support on a monthly basis. But I want to be even more careful here because this market is weak. Now, I want to be alerted when we lean into this support level and hopefully overshoot to the downside given current market conditions. And I want to look to get long of Floor Corp for a trade only. Same thing with Groupon. These companies are weak and in all probability will get weaker in the future, especially if the markets weaken up even further. Okay, set it and forget it. We're good to go here at Floor Corp. Now, Pfizer, which is a mega cap stock, is sitting at current with RSI of 14.86. Now, I don't know how much of a short interest is in this name, so I don't expect a huge rally here, but you may see some value. Investors move in, some fund managers seeing value. So that would probably be the upside catalyst for these shares. We have a possible double bottom setup forming on our Stokes. And again, RSI, very oversold. Let's identify where we have historical support below. So I'm on a daily chart. I'm using monthly support levels, and we are just shy of it. So we're going to create an alert at this level. Okay, there you have it. Set it and forget it. We're good to go about our day with Pfizer. Now, the last chart we're going to look at here is HSBC Holdings. And this is one of those banks that has me worried, along with Deutsche Bank and the Italian banks. The Italian banks are an absolute wreck as well. A lot of problems over in Europe, folks. And HSBC is in free fall at current. We have RSI at 16.64. We're forming a double bottom setup. Let's look for historical support below using monthly support levels on a monthly chart. And I think we're coming down here to around $31 per share. I'm going to create an alert here. Okay, there's my alert. So that's 4 symbols I just went over. We created alerts on these symbols. I don't want to revisit these symbols until our alert is hit. We'll check up on them when we do market wrap or we discuss them in the forum. Other than that, let these stocks come to us. We do not want to hope when we should fear. Let them come to us. Let's find support levels that have been defended in the past, and that's where we'll find other investors of like mind who will look to defend the shares and will allow us to open up long trades at depressed technical levels. Okay, folks, it is now 5:35 in the a.m. Eastern Standard Time, and we're going to segue over and into the pre-market activity using 4-hour charts of the major averages. Keep in mind before we discuss these charts that we have a lot of economic data coming out this morning. So please, if you're turning on Bloomberg, if you're turning on CNBC, if you're turning on Fox Business, don't let these talking heads take up parking space in your head. This market is weak. Don't let the pre-market activity, which is positive at current, fool you. We were higher earlier today, but they won't talk about that. What they'll talk about is the fact that we are rebounding this morning. Have we hit a bottom? And they'll talk all about the glories that is the U.S. economy. And on a historical basis, have been nowhere else to be but in the stock market until, of course, it's not. We do have corrections. I think that we are in a correction right now. Do I think that we could rebound prior to the 2020 elections? I do. But we need to wait for the setup. Now, in the pre-market, the S&P E-mini futures, they are up marginally. They were up higher. We hit resistance at 28.60 and pulled back. So nothing to make me excited that we are going off to new highs anytime soon. The NASDAQ, very similar deal here. We were higher. We have given up a lot of those gains. We are now negative. We were higher this morning. We are at a support level. Taking a look at the dollar. The dollar had a very strong day yesterday. Why? I have no idea. Could it be the concerns out of Hong Kong? Sure. Could it be concerns regarding Brexit? Sure, because gold and the dollar did close up higher in tandem yesterday. However, the gold miners took it on the chin with a bearish key reversal. We spoke about that last night on Market Wrap. Speaking of gold, let's go to gold. Gold was lower. We are now higher on the morning. It looks like we are flagging out here. We remain very, very long of the gold miners. While we have come a long way in a very short period of time, and we will have corrections, we will have consolidations, I think that we are in the very early stages of a major bull run here. Why am I so bullish on gold? I don't care if the trade wars end tomorrow. I don't care if Brexit leaves and they're given a coupon to get discounts on all EU goods. That's how well it went. There is nothing that's going to take away the fact that we have $22 trillion in debt and rising in the United States. There's nothing to take away the fact that so far in 2019, we have federal deficit spending which has exceeded all of 2018. That is an immovable fact. And gold in pound sterling terms, in Aussie dollar terms, is at all-time highs. So we have a lot of catching up to do in dollar terms. We remain very bullish. We'll be looking to add more to our gold mining position. Silver, which we have traded, we're looking to get back long of. We booked profits here about 14%. We're looking for a breakout. Again, I will be talking about our trade using the USLV on Sunday evening. Again, the link is below, the webinar with TrendSpider. Please join in. And I will be taking requests to go over charts, assuming that we have the time. So silver at current is in a triangle formation. We'll be looking for a retest of support to scratch the itch to open up a new position, and then we'll look to add more aggressively on a breakout and above this upper band of resistance. So more to come on silver. Bitcoin, back down below 10,000. A lot of problems here, folks. I would not be a buyer of Bitcoin. I would avoid the crypto arena right now. Horrible price action. In times of turmoil, these cryptocurrencies were supposed to be the place to be, the new gold, and it is not turning out that way for now anyway. So the technicals are not good, and they appear to be looking worse and worse. I would avoid Bitcoin. I would avoid the crypto arena in total. And that is it for this morning, folks. If you're not currently a member, please sign up for our 14-day free trial offer. Cancel at any time. If you're not ready yet, that's cool. Subscribe to my YouTube channel. Click the like button. Share with a friend. Get the word out. Not everyone is a talking head that parrots the financial media elite's narrative of the day. We speak our own mind here. So please tune in whenever I post a video. Thank you, and have a very, very profitable trading day. And don't chase this market, please. Be well.